Welcome to the Akin Emerging Manager Minute. I'm Max Karpel, a partner in our investment management group.
And I'm Kustin. Our topic today is liquidity management for hedge funds.
Liquidity terms are one of the most important parts of hedge fund structuring.
So we always tell our emerging manager clients, your liquidity terms should reflect your investment strategy. If your portfolio is illiquid, your liquidity terms need to match that reality.
Exactly. If you offer too much liquidity, you risk hurting the very investors you're trying to serve. When markets get choppy, hedge funds are supposed to shine. But if investors can pull capital too easily, the fund might be forced to unwind positions at the worst possible moment.
And we saw this during the financial crisis in 2008, 2009. Funds that had too loose liquidity terms often faced mass redemptions, and some had to shut down just when their strategies were poised to perform.
That's why tools like lockups, gates, and suspension rights exist. At Akin, we have fantastic databases that allow us to track hedge fund terms. So we know that about 31% of headline classes use hard lockups, and 25% use soft lockups. Gates are also common, especially investor-level gates, which help managers manage outflows without penalizing the entire investor base.
But in today's world, there's a twist. Many managers are running SMAs alongside their commingled funds, and SMAs, by their nature, can be terminated on very short notice. So that creates some complications.
Exactly. If an SMA investor pulls out, the expense burden shifts to the remaining investors. You're spreading fixed costs over a smaller pool of capital, which can be a real issue.
So again, it's about balance. You want to offer reasonable liquidity, but not at the expense of the investment strategy of the fund or the long-term health of the fund.
Liquidity management isn't just a legal issue, it's a fiduciary one too.
And getting it right means protecting your investors, your investment strategy, and your business. So thank you for joining us, and we look forward to seeing you at the next installment of the Emerging Manager Minute.